Please come to Accounting Standard 20, Earning per Share. This is a very different accounting standard as compared to all other accounting standard, because here we are dealing with a number that we have to calculate, that is earning per share. All other accounting standard, they deal with recognition principle, measurement principle, disclosure principle relating to accounting issues. Here we are dealing with a number that is earning per share and obviously some disclosures of earning per share. Why a separate accounting standard had to be issued on calculation of earning per share? That is so simple. Earning available to equity shareholder divided by number of equity share. Is it right? And that is earning per share. So what is so great about this earning per share, that not only in Indian accounting standard, IFRS, US GAAP, everywhere in all accounting system, you will find there is a standard on earning per share calculation. EPS is a very important number for decision making purpose by the investor. 1. EPS multiplied by price earning ratio will give you market value of the share. Is it right? You can compare the EPS of two similar type companies and find out which of them has performed better. Okay. EPS can be used in mergers and acquisition for calculating the share exchange ratio also. EPS divided by market price can be used to find out the cost of equity. You can compare the EPS of two companies, 2 years of the same company, and find out whether the company's earnings are growing or not, whether the company's efficiency is improving or not by checking EPS of last few years. Is it right? And EPS calculation is not that simple as it appears to be. The reason being that in a year, the share outstanding can change due to several reasons. The number of share outstanding can change due to several reasons. For example, give me 10 reasons why the number of shares can change during a year. 10 reasons. 1. Normal issue of share. Is it right? Then second, bonus share, right share, ESOP, conversion of debenture into equity share, conversion of preference share into equity share, conversion of say loan into equity share, buyback of share, conversion of partly paid share into fully paid, issue of partly paid shares. Is it right? Stock split, reverse stock split. Is it right? Amalgamation, 2 types. Share issued in amalgamation, the nature of purchase. Share issued in an amalgamation, the nature of merger. Okay, 10 से ज़्यादा हो गए. So, अब आपको इन सारे situations को EPS calculation में कैसे use करना है, that is what we will learn over here. Is it right? And these changes can take place at different point of time. Share may be issued, let us say, in the first 3 months, buyback may take place in the last 6 months, then bonus share may be issued in the last month or last day of the year. At different point of time, these changes can take place, and therefore, how to incorporate those changes while calculating the earning per share. Therefore, it becomes a little complicated standard also when lot of changes have taken place during the year. What is the objective of AS20? The objective is, as I said, the objective is to help you to learn how to determine the EPS, how to present the EPS. Okay, so determination and presentation of EPS which will improve comparison of performance. The focus of the statement is on the denominator of the EPS. What is written in the denominator of the EPS calculation? Number of shares. So you will say that maximum space has been devoted to calculation of Number of share, because the number of share keeps on changing during the year for different reasons. Nowadays, every company, because revised schedule 6 specifically requires you must calculate and present earning per share on the face of the profit and loss account. Okay, so now the scope paragraph, you just simply remember every company as per revised schedule 6 now has to calculate, present EPS on the face of the profit and loss account, and in the notes to account they will disclose the working of that EPS. फेस ऑफ द पेनल अकाउंट आपको सिर्फ समरी लिखनी है, बेसिक ईपीएस इज 2, डाइल्यूटेड ईपीएस इज 1 और वट एवर इज दैट, एंड दैट वर्किंग ऑफ दैट इज शोन इन द नोट्स टू अकाउंट. If a company is preparing CFS also, that is consolidated financial statement, then in the consolidated financial statement also it will calculate and present the earning per share. So EPS will be calculated for separate statement also, and EPS will be calculated for consolidated P&L account also. In AS 17 you have studied, if segment report is prepared for consolidated financial statement, it is not mandatory for separate financial statement. That exemption is not there for EPS. EPS will be calculated based on separate P&L account as well as consolidated P&L account. First we'll see the definition of equity share, preference share, potential share, etc. What is an equity share? An equity share is a share other than a preference share. As per AS 20. So what is a preference share? As per AS 20, preference share is a share which carries preferential right to dividend and repayment of capital. So nothing great about it, normal definition. Next is financial instrument. There is a whole accounting standard on financial instrument. In fact, there are 3 standards on financial instrument. That time we will study the meaning in detail. Today just understand a financial instrument is any contract that give rise to both financial asset of one enterprise and financial liability or equity share of another enterprise. That is, it give rise to financial asset to one enterprise, and the same instrument is either a financial liability or equity share of another enterprise. Example, debenture. Now there are 2 parties in debenture. One which has purchased the debenture, invested in the debenture. So for the investor, debenture is a financial asset. For the company, the issuing company, debenture is a financial liability. Next example, equity share. For the investor, equity share is a financial asset. For the company which has issued equity share, it is an equity. It is an equity. It can be a financial liability or equity of the other enterprise. Is it right? These are 2 simple examples, but there are so many other examples also, which is a financial asset for one party and financial liability for other party. What is a financial asset and what is a financial liability, that you will study in accounting standard 30, 31, 32. Okay, not today. That term we will not use much also in this standard financial instrument, don't worry. The important term you tick mark is potential equity share. What is a potential equity share? That means a financial instrument or any other contract which may not be an equity share now, which is not an equity share now, but it has the potential to become an equity share in future. It has a potential to become an equity share in future. Any simple example of a potential equity share? All convertible instruments which are convertible into equity share. Okay, so example is convertible debenture. Then the next example would be convertible preference share or warrants. Is it right? Share warrants are also potential equity share because they are not equity shares right now. But the share warrant holder can apply to the company, pay the price and convert into share. Then in our syllabus we will study in this chapter options also. आपकी book में लिखा हुआ options. Then shares which would be issued on satisfaction of certain condition resulting from contractual arrangement. And share application money is also a potential equity share. Why share application money is also a potential equity share? Because it may also get converted into equity shares. So these are some examples of potential equity share. Now the question is why we are discussing potential equity share in AS20? When these are not equity share on the balance sheet date, why we are discussing? Because potential equity share will be used to calculate what is known as diluted EPS. What is known as diluted EPS? Diluted EPS is EPS calculated after also taking into account potential equity shares. More about diluted EPS after some time. Next is what is a share warrant or an option? Share warrant or options are financial instrument that gives the holder the right to acquire the equity shares. So that means share warrants or options are potential equity shares. These are potential equity share. These are not equity share right now, but the owner of share warrant or option have the right to get it converted into equity shares. And the last is fair value definition. Fair value is the amount for which an asset could be exchanged or a liability settled between knowledgeable, willing parties in an arm's length transaction. So fair value means market value. Okay. So now we'll continue tomorrow.